I'd say real estate private equity is one of the greatest businesses in the world to be in. Also, one of the most difficult businesses in the world to be in. Believe in what
Mhm.
you're selling, obviously, and be very, very genuine to the investor on the other side. Don't come across as a salesperson. The minute you do that, I mean, you probably lost the game,
How
right?
can you sell something if you don't own it yourself and believe in it? Hi, thanks for joining me today. I'm George Pino, the CEO of Commercial Brokers International, and today I have a wonderful guest with me. It's Ava Benesocky, who is the CEO and co-founder of CPI Capital. Now, Ava's a leader in the real estate syndication game and brings investors a lot, builds wealth for them by through multifamily and build-to-rent opportunities that she syndicates, and she's very passionate about making passive investments available to everyone, not just the wealthy. So, Ava, welcome to the show.
Thanks for having me, George. I'm excited to
Absolutely.
get into things.
I'm very excited as well. I think you bring a wonderful new insight and different approach to a lot of the investments that I think the viewers are going to really enjoy and like. But to kick things off, this is always a question that is typically asked of me, so I'm going to ask you. What was that one aha moment for you that got you involved in real estate investing? There's all kinds of other investings and whatnot, but what was it about real estate that attracted you?
So I'll go back when I was 17 years old. I was just graduating high school. I absolutely loved real estate. I watched all the shows on television. I got very excited about it. And I'm like, I want to be a broker. I was obviously too young at that time. I knew that. Looking at myself in the mirror, I'm like, nobody's going to take me seriously. So I waited till I was about 22 years old, got my broker's license, and I started helping people purchase their largest investment, right? So that was something that was very exciting for me. And I absolutely love what I did. I grew up in a really small city. I from originally from Canada, third generation Canadian, but I grew up in a province called Alberta in a small city, and it was really nice. Everybody kind of knew, liked, and trusted me, and I was able to actually help a lot of people, buy their either their first properties, some rental properties, helped investors a lot, and really did very well in the small city that I was from. It wasn't until about 5 years ago where I pivoted to real estate private equity. I'd say that was more of an aha moment because we get into the investment world, where I pivoted to real estate private equity, and I thought to myself, wow, I can actually help the masses invest in real estate, not just individuals. As a broker, I was focused on investors quite a bit, but that's really where there was an aha moment, I'd say, for me when I really got into the investment world, started learning about investing, started
Mhm.
learning about passive income, and then started learning about how I can help the masses in the
Yeah.
space.
Okay. Makes perfect sense to me. I mean, I think my route was a little semi-similar, but not quite. I think it took a much longer time frame to get there. But, we started off as brokers as well and then started investing. We've syndicated, but we also have done both on the institutional side as well as on the private family office or just going out families. And completely agree with you. I love, I think one of our core things as a real estate agent, I've always pushed out that, you know, how can you sell something if you don't own it yourself and believe in it? So you should
Right.
own and invest in real estate as well. So, a lot of young agents can't do that, but a syndication does offer that opportunity and to be able to at least be part of ownership and interest in that. Now, during this time, were there any mentors that you could remember or anything or pivotal moments that really shaped the way that you wanted to handle your investment strategy as opposed to just maybe raising a blind fund or rather than doing a syndication or things like that?
Well, see what excited us about being in Canada, the syndication model, the one that we utilize, multi-institutional multifamily value add, or even built to rent, the built to rent communities that we're acquiring now. The business model doesn't really work here in Canada. Cap rates are too compressed. The rent to value ratio is it's not going to work. You're not even going to hit the 1% rule. So when we originally started, we got very excited about what was south of the borders. And that was this business model that could yield great returns, above market returns for investors. And we're like, hey, wait a second, with the government legislation here in Canada, we're really, have our hands tied with landlord restrictions, increasing rents. It's not business friendly whatsoever. So that was where we got really excited. But going back to your question, George, what was your question?
Well, about mentors and pivotal moments that really
That's right.
shaped the investment strategy.
That's right. That's right. So what we did, I hate to say this, but I never had a mentor. And I hate to say this, but I did build a real estate private equity firm from the ground up without joining a mentor program or actually getting a mentor. And I wouldn't recommend anybody doing that. There was a lot of, I always say there's a lot of blood, sweat, and tears. I do not recommend that at all. But we literally built brick by brick when it
Yeah.
came to building the company, each department, and then to where we're at today.
Now, that's a very actually that's interesting. I'd like to kind of talk a little bit about more of that and delve a little bit into that. Now, was one of the reasons that you built the company brick by brick, so to speak, or was it because you identified areas that other companies that were lacking, or the general model that you thought you could improve on and do better for your clients? And if so, what aspect of that? Or did you just think that, you know what, if I'm in control, I'm going to have a lot more ability to control where it's going as well?
It wasn't really that, George. What we did was, well, first of all, we had a bit of a monopoly here in the Canadian market. There's not a whole lot of
Okay.
companies that do what we do,
Okay.
right? So that was one thing. We looked around the Canadian market. Again, nobody was really, there was a couple other companies that had great success. It is one of the, I'd say real estate private equity is one of the greatest businesses in the world to be in, also one of the most difficult businesses in the world to be in.
Hmm.
What we did from there was we looked at where we wanted to invest. And obviously, we want to invest in states, and particularly CPI Capital's focus is Texas and Florida. We know we're very data driven. So we asked ourselves, where do we want to invest? And that's what are the fastest growing states in the US?
Hmm.
And where is it landlord friendly? Where is it business friendly? Where is there net migration, job growth, population growth, rent growth happening? So we really followed the data there. And then we started building the infrastructure to now, today, where we're a fully functioning operational real estate private equity firm.
Okay. Awesome. And that actually, ties into a little bit of another question I had for you, which was, when you were starting and scaling CPI Capital, it couldn't have been easy, and definitely doesn't sound like it was, especially without having a mentor that may have done it before or been able to guide you through some of the roadblocks, or even just speed bumps that you'd come into. Um, what do you think were some of the biggest challenges in early days? Was it more raising capital, or was it more about finding assets, or was it more identifying the actual business model and structure that would appeal to investors?
That's a great question. Realistically, when we first started, we looked at ourselves and we said, "Hey, we don't have the operational side of things,
Mhm.
set up in the U.S."
Sure.
So when we first started back in 2020, we actually partnered as co-GPs with people who had hundreds of millions of dollars worth of assets under management. So realistically, when you first start in this business, you can't just start from the ground up. You have to obviously partner up and learn how to structure everything and so forth. Now being from Canada, again, now we have about 60/40. We have about 60% of our investor database is from Canada and 40% is from the US. As you and I kind of mentioned, we've made a move to the US now. We're living in Florida. But when it came to investor raising capital, we were just talking about this on our show and kind of laughing is people think, you have a database of this many investors. It's going to be easy to raise, let's say, $1 million.
Yeah.
Okay. So to date, I have raised $30 million
Very
for
nice.
our investments, and it's not an easy task.
No.
Just because you have 10,000 people part of your database doesn't mean that
Actually,
you're going to go on to.
we've raised money as well, and just applaud you for that.
Thank
So
you so
it's not an
much.
easy task.
Thank you. Yeah, I would almost say, it's probably one of the most difficult part of the business,
Yeah.
is raising equity. And again, I was laughing with my partner and thinking back to when we first started, saying, "Oh, we have a database of this much. We're just going to click a button, send a deal out. We're going to raise $1 million, and be good to go." It's not that easy. It's really not that easy. So that was one of the, we found the partners, so we knew that we were set there. Then it was the raising equity part of the business, right? That grew obviously over time
Yeah.
when we built all the systems and structures. And then we had the business model. And the business model, we wanted to simplify it for investors. We wanted to keep it very black and white, easy to understand. Institutional multifamily investments. Already built, already stabilized, cash flowing. A lot of investors love the equity growth, some love cash flow. And it's a very simple business model. I always tell investors, look at us as fix and flippers, but on a large scale. So we kept things very simple. We broke it down. We broke down the data. Break down the underwriting for investors. And then recently, we've been very bullish on the BTR, asset class, the build to rent asset class.
Hmm.
We finally bought our first build to rent in San Antonio,
Okay.
which we're very excited again. That is also a very simple model, but we're a real estate private equity firm who has two main asset classes that we're focused on, and that's really where investors get comfortable, right? Is they understand the business model. Warren Buffett says
Hmm.
never invest in a business you don't understand. So we try to simplify things that way.
Okay. All right, that makes sense. I've always found that, well, for people, especially like myself, keeping it simple is the easy way to go,
That's right.
or the best way to go. So, while you're scaling the company, I know that a lot of companies actually lose focus on maintaining those personal relationships with investors. It's kind of hard to do when you're going, it's easy to do when you're raising 1, 2, 3 million at a time. Hard to do when you're raising 10, 20, 30 or so potentially. And I know for you, that's a key aspect to part of your business model, but also just who you are, where you want to have those personal relationships with investors. How do you maintain those still while also trying to scale up the company?
I love this question. This is something that I've, lived, breathed, and ate for
Yeah.
for many, many years, building out the investor relations department. Myself, they always talk about getting your first 1,000 raving fans, right? So it's so hard to obviously be on all the calls, but when we first started, it was me, myself, and I.
Mhm.
That was getting on the calls with investors, having Zoom calls, connecting with them. I mean, raising equity is really about building trust and creating the relationship. If they don't like you as a person, if they don't connect with you, if they don't feel that you're genuine, you're probably not going to be able to raise equity. So what I did, George, was it wasn't until recently, I would say, that it was myself on the calls. I would literally do it. Uh, I've spoken to around 1,000 investors on a Zoom call. It was, so many calls. But what I would do is I would give them my personal cell phone, my personal email, and tell them to reach out if they have any questions. Until you can't handle that many people
Can
anymore, right?
like that's great
Right?
up until a certain point.
It is. That's correct. So what we did after that is I always like to do touching points with my investors, other than our monthly communications that we send out to the whole investors on each project. We
Mhm.
send them out, on the 20th at 6 a.m. EST every month. We've never missed it. What I do is I like to have a touching point with my investors. Well, I have now hundreds of investors. So when I got to that point and looking at myself in the mirror saying, hey, I can't just be the only person, I started building out the investor relations department. So what I've done now to scale is I've trained people to do exactly what I did and have the same follow-up, the same touching point. If people want to, bring me on if my investor relations team, they say, hey, they want to meet Ava Benesocky, they'll bring me on the call and then I'll jump on calls here and there for the new investors that come in. For the
Sure.
investors who have already invested in our deals, it's still myself. I'm still the one wanting to reach out to them, see how they're doing and everything else like that. Because I mean, you get this abundance amount of referrals that are thrown your way when you give people the time and the respect and what they want to see as an investor.
Absolutely. I think people forget that, especially in the syndication game, is that it's still a relationship business. And ultimately, you may get an investor come in and invest with you, but to maintain that and have them reinvest with you, it's not just about performance, but also about maintaining that relationship and letting them feel that you value them as well, and making sure rather, let me rephrase that, not make them feel, but make them understand that you actually do value them. Um,
Absolutely.
Big difference. That was a salesman in me that was talking a second ago, but the true investor is, I want to feel that way. I want to know that you care about me. Um, you know, I know that part of your investment and investor relationships, has to do a little bit with training investors as well or advising them. What do you see as one of the bigger mistakes that passive investors make when initially going into like a syndication type deal and whatnot? I mean, I get this question a lot. I know what my red flags are, but what do you see as some of the issues that a new investor should be asking or at least be aware of?
This is a great question, and I have this conversation all the time with investors.
Yep.
So what I always say is, doctors, lawyers, accountants, their main game is not real estate. So
Mhm.
sometimes, a lot of the time, actually, they don't know what they're looking for, right? They might have a great conversation with the syndicator and, oh, I, might get excited and say, I want to invest with this person. What we do, and I don't want to get too complicated here, but a lot of the times when you're doing underwriting, you can simply change the numbers a little bit here and there and make the returns look astronomical, very
Absolutely.
exciting, take them from 20% to 30%. I mean, it's very simple to do that. So I always let investors know, hey, listen, you're not an expert at this, and it is very difficult and it is very complicated stuff. But you're going to want to look out for the rent growth assumptions. You're going to want to look for exit cap assumptions. Maybe do some research on a little bit on that before you go investing with a syndicator. Because I've seen it many times before, where my group has made an offer on the exact same deal as some newer syndicator, and
Hmm.
they won the deal. They put $1 million more, and when we underwrite that deal at that price, it's 8% returns, but they're stating
Yeah.
20%. So I mean, this is happening all the time, and investors have to be very aware that this is happening. Now, not to mention that, of course, I always tell investors, don't invest with just one group, diversify, try to get at least three
Hmm.
syndication groups that you trust and invest, with
Yeah.
all of them, and build trust with those particular groups and everything like that. But what we do at CPI Capital to make investors feel comfortable, even though, again, maybe they don't understand the right underwriting, we actually record an hour-long video. I
Okay.
get my VP of investments, Paul Hopkins, and I say, hey, listen, let's not just say that we're going to get these numbers. Let's show investors how we're getting these numbers. Let's show them the data. We obviously put together a very comprehensive deal presentation, but then we record this hour-long video. And investors who aren't sophisticated, they get to learn as well. They get to see what numbers we're plugging into the underwriting, and that helps build a lot of confidence. And I would say that's been instrumental, honestly, in helping us
Okay.
raise millions and millions of dollars because it builds a lot of trust with investors, and then we explain it kind of as we go.
Oh, no, I think that's great. I think education and transparency are one huge, trust being another one as well. That's huge when it comes to capital raising, trust and transparency, the two T's. Um,
That's right.
and I know that how what you're saying definitely cultivates that already with the investors. Um, I've always one of my easy red flags is when I see a whole bunch of front-loaded fees that the sponsor's putting up. So,
That too. Yeah.
oh, one of the last buildings I owned, we ended up selling. It was to a syndication, and the sponsor came in. And the only
Yeah.
reason I sold it, because I was originally going to redevelop it and add a few more. It was a multifamily asset on 4.5 acres in Dallas with 78 units that I owned. And I was going to redevelop it, add about another 25 units, and then reposition and sell. The area's going up. He made me an offer that had all my profit written in.
Oh, lovely.
I completely took it. It was all front loaded,
Yeah.
of course. I
Yeah.
think, unfortunately, um, the property went back to the bank a year and a half after they bought it from me.
Mm.
But the sponsor did well because he front loaded his fees. That's usually a big red flag for me.
Yeah, yeah, absolutely. You have
Yeah.
to look out for that. And one more thing that I thought about, George, too, is as an investor, you always want to talk about debt.
Yep.
What kind of debt are you
How's
getting
it
on the
look?
property?
Yeah.
Right? We're very risk adverse. We're very conservative. I mean, on our last acquisition, we did a 55 LTV.
Okay. Yes.
And while everybody was buying from 2020 to 2022, I mean, there was trillions of dollars of commercial real estate loans that were secured around that
Mhm.
time. I mean, these are usually 3 to 5 year terms. We hit a pause. So we hit a pause, and we didn't acquire anything from, oh gosh, it was for about 28 months. And when we did acquire something for the first time in July of 2024, we did a 55 LTV,
Yeah.
fixed agency debt. So that's another very important thing for investors to say,
Mhm.
what kind of debt are you putting on this property?
Yep.
Are you gonna,
Is it going to be over leveraged where I might have an issue, or is it going to, yeah, I 100%, I agree with that. All right. So now you've already mentioned that you're really focused on BTRs and multifamily kind of maybe an AC rehab, but for the most part, stabilized assets on a cash flow play with potential to do something and create value on your exit. Do you see yourself staying within these fields or expanding anything along those lines? I know that part of your business model is that you want to kind of show that this is what you specialize in, but as markets change, everything is cyclical in real estate. Do you have plans to potentially go into another asset class or anything along those lines? And I know if it's a little too early to talk about, but I just thought I'd throw it out there. Push it under the
No, that Yeah, absolutely. You know what? I always tell my team, do not get distracted by shiny objects
yeah.
because we have so many people reaching out to us. Hey, I got this deal, I got that deal. And it is very exciting and yeah, we can go down that road one day. But right now, we need to be hyper focused on the two states that we're acquiring our assets,
Yep.
and we need to be hyper focused on expanding in the multifamily value add and the BTR. I mean, there's so much. I mean, transaction volumes, obviously, as you know, have not. There's still a bid-ask
Mhm.
spread between sellers and buyers, and there hasn't been a ton of deals. I mean, interest rates are still high. If they come down, obviously, transaction volume will pick up. But I tell my team, let's stay focused right now on these two asset classes. Let's build, 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 and maybe one day in the future, yeah, we could possibly expand. But let's just keep it simple for now while we're building, and go from there.
Makes sense. Um, okay. Now, as a female leader, and I would call you a leader because there aren't too many people that actually do what you do that are women that have started this in a primarily male-dominated industry. Um, what challenges not or even opportunities did you see or notice that may have led to or that you may have experienced as far as, I mean, did you come across, I'm sure there were some challenges because I've been in the industry long enough to know what obstacles that you might face, but did you also perhaps maybe see more opportunities as well that may come up and whatnot, or how was that?
Yeah, the experience has been great. I definitely showing up to calls. It is all men usually on the calls. And on the investor side, I mean, on our last deal, we raised $10.5 million of equity. Only 8% of that was from women investors. So not
Awesome.
only
Yeah.
on women in leadership roles in real estate private equity, but on the investor side as well. I mean, 8% is quite low, right? When you look at the stats. So other than just, being all men on the call and so forth, you just really got to show up. You got to know your stuff. I'd say that on the side of women looking up to me, that has been very positive,
Yeah.
obviously, and obviously men as well saying, "Hey, good for you. You got into this space, which is it's a big beast. I always say real estate private equity. It is one of the greatest businesses to be in the world. But yeah, no, I think mostly it's been a positive
Yeah.
thing for
Good.
me.
Nice.
Yeah.
I actually expected that answer, but and hoping for it because I think see things changing. Although we're still a male-dominated industry, it is definitely changing across the board. That's nice to see that, and at least the experience. Because I know back 20 years ago, there would have
Yeah.
been a lot of kickback on a lot of stuff. But yeah, that's awesome. That's good to hear.
Yeah.
Now,
Absolutely.
speaking of changes, then, and what you've experienced, how do you see AI helping you or hurting you? AI, prop tech. What are the new technology platforms that you see for investors that can potentially change the way syndications may be viewed or even done or looked at for investments?
AI is growing at such a rapid pace. I mean, over the next 5 years, I think it's supposed to like 100x or something crazy like that. It's almost scary, thinking about it.
Yeah.
We absolutely, AI is also making our lives so much easier as well. Even on the personal side, health reasons. I mean, you can literally research anything. It's incredible.
Mhm.
I mean, it's amazing. We haven't really incorporated AI into our underwriting or anything like that yet.
Okay.
There was a platform that was saying, hey, somebody's trying to introduce this new platform, but it could make investors, when they're trying to vet a deal, it could make it much more easy. There was this idea where, a deal presentation can be 100 pages. Instead of investors reading through the whole deal presentation, why don't
Mhm.
you plug it into an AI platform? They can ask what questions are on top of their mind, and
Yeah.
then they can just ask the questions that automatically pops up for them, makes their investment experience much more, user friendly and obviously much more easy to kind of understand the deals. That was something that I thought could be, changing the game a little bit as well. But I mean, I don't even know where it's headed. I'd say we just gotta try to keep up with it because if we don't, we're gonna get left behind.
Okay. It's actually one of the wisest things I've heard about AI lately is, yes, it is probably too new to really predict how it's going to go and where it's going to go, but we all realize that's going to be a game changer in it and that we have to be on top of it and at least be able to understand how to utilize it. Um, I actually have a little bit more luck with you on that, and that my experience, and only from age. I remember when somebody first said, "Have you heard of this internet thing? It's going to be huge." So,
Nice.
and at that time, everybody was excited about it and thought it was going to change everything that we did, but we thought the change was
Yeah.
going to happen like that.
Yeah.
And, it didn't, obviously. My gosh, there was 30 years until the iPhone came out. Um,
Right.
from initial internets and really becoming accepted and everything else, 25, 30 years. So, but we saw that and we felt in our heart of hearts that there was going to be a change or shift in how we look at or process or do things. And I feel the same with the AI model, but at the same time, just like you're saying, if I'm a syndicator or sponsor, just by tweaking a couple of minor tweaks on the assumptions, I can make a dog look like it is the most amazing, wonderful, thoroughbred racehorse. And you know, AI, I think, is the issue where people are relying almost too much on it right now. I mean, I
Yeah.
just read a case the other day that a attorney lost his appeal because he quoted a case that he researched on AI, and the
Oh
AI
God.
made a fake case up.
Oh no. So you have to be very careful.
So, I
You,
mean, those little things. I mean,
yeah.
I have a little bit of concerns with that, but definitely see the ability to, to streamline, make our jobs a little bit easier, and things like that, and even outreach. So, absolutely, that's I think we're kind of on the same page there. Now, if you could though change one thing right now about
Yeah.
real estate investing and the real estate investing world, what do you think that might be?
If I could change one thing
Yeah.
about the real estate investing world, it would probably, I don't know, I'm just thinking right now, is it from an investor perspective or from,
Anything, investor perspective or from your perspective
I
as a
would say
syndicator.
probably to get the unsophisticated groups probably out of the, um, you know, try to get the unsophisticated groups to leave this space. Because I
Yeah.
think I think that's a big part of protecting the passive investors who again are, trying to figure out what investments to make and they get really excited, obviously. I mean, I've just heard of so many different things being on calls with investors. Investors losing money and investors,
Essentially everything.
invest
We're getting tied up and not being able to access it and whatever the case may be.
yeah, not getting communications or Canadians investing with US based syndicators getting double taxed. I mean, I've heard it all, right? So there's so much time and energy that goes into this business and just getting the unsophisticated guys out of here could probably protect more
Yeah.
of the passive
Yeah.
investors.
And I'm assuming you're talking about the unsophisticated sponsors, the ones that are
That's
kind of,
right.
yeah,
That's right.
the ones
Thank
that
you.
are hoping that the tide keeps rising because they're just going to ride that wave in, but they haven't really done any underwriting or modeling or anything else that can expect it. More speculators than investors, and we saw a whole slew of those during the last run up. So
Yeah,
yeah,
absolutely.
I agree with you there as well. Um, Now, if someone if the younger you were to find someone like yourself, what advice would you give them when they said, "I'm trying to raise my first million from investors. How should I go about it?"
I love it. So what I would tell them, first of all, you have to be seen everywhere. So start getting comfortable with being on camera, because you're not going to be able to raise raise any. Well, you might be able to raise some. I shouldn't say that
Yeah.
because I understand that. But if you want to raise, your first million, I'd say start getting comfortable being on camera. Try to be seen everywhere. You can easily hire VAs that can assist you with promoting you on LinkedIn, Facebook, Twitter, Instagram, all these places that people are. When an investor logs into Facebook, they should be seeing you. When they log into Instagram, you should pop up. When they log into Twitter, there you are, right? They have to consistently be
Mhm.
seeing you. So when I first started, I started speaking all over Canada and the US and anywhere I could possibly speak. And then I also started my own YouTube show, Real Estate Investing Demystified, where we've now interviewed over 350 guests. Tried to speak on as many stages as I could. I mean, if you really want to try to raise capital, the next advice I would give is there's so many sales books out there. There's so many, raising capital gurus out there. I'd say
Mhm.
just keep it simple. Be genuine. Believe in what
Mhm.
you're selling, obviously, and be very, very genuine to the investor on the other side. Don't come across as a salesperson. The minute you do that, I mean, you probably lost the game,
Yeah.
right? So that's probably the biggest advice I can give somebody.
No one wants to be sold. Everybody wants to get advice.
Yeah, there you
So
go.
that's one of the training for sales agents that we have here. We're always saying, you know what? Don't try and sell, especially over the phone. You're never going to get somebody to list your property. You're never going to get somebody to hire you as a broker or do anything over the phone.
Yeah,
So instead, give them advice, talk to them, give them free advice. You're going to stand out from the crowd. If you approach something without any intent, a lot of times the intent that you would have wanted comes back to you. So,
absolutely.
yep. So finally, then, because I've really enjoyed this conversation. I have one last question. Um, because I think this gives a lot of insight into actually why and who and what you do, and that is if you could think of right now, today, what legacy do you hope to leave behind within the industry specific in real estate? Is there a legacy or something that when someone says Ava Benesocky, immediate come to mind? Oh, she's what?
Ava Benesaki, yeah, the legacy I would want to leave behind within the industry would be just to try to help as many people as I can. I mean, we are focused on family offices and high net worth investors, but we want to try to help as many people as we can. And what are people looking for?
Yeah.
People are looking for spending more time with their family. People
Mhm.
are looking for time freedom so that they can do more travels. People are looking to retire earlier. People don't want to work till they're 65, 70 anymore. Long hours. Um, you know, maybe they do. Maybe they do.
I was
I'm
like,
not
they're
speaking for
crazy. No,
everybody. I'm talking about
I
like
think it keeps
crazy
people
hours,
young.
right? Yeah, 100%, but maybe not crazy hours. Maybe they want to
No,
work a little
no,
bit,
no,
play a little. You get what I'm saying?
absolutely.
So the legacy that I would want to leave is just for when people say Ava Benesaki helped me achieve this so that I was able to spend more time with my family. I was able to
Mhm.
work less. I was able to enjoy life a little bit more. I think that's really the goal of
Mhm.
what I do every day
Yeah.
is to help people.
Yeah. And obviously you wouldn't be successful if that wasn't the feeling that they had as well, I think. And I can get that. I've never dealt as far as any investments or on transactional side with yourself. Did a little bit of research on some of the deals and flows that you have done and things, and everything that you've said. Just talking to you, I can feel that and see that, and I love it. And I've loved this interview, and I really appreciate you coming onto the channel here because I think you're adding a lot of value for a lot of our viewers and also clients as well. And so, which brings me to mind, if you do like this video and you do like what Ava had to say or any of the questions I may have asked, don't forget to hit that like button and don't forget to subscribe if you're not a subscriber already. And with that, if anybody does need to reach you, Ava, what is the best way to do so or your company?
Yeah, you can check out cpicapital.com or find me on LinkedIn. Very active on LinkedIn, Ava Benesaki.
Fantastic. Appreciate your
Thanks,
time
George.
and look forward to the next time we talk, Ava.
Me too, George. Thanks so
Thanks.
much.
Thanks.
Appreciate it.